Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Get your free copy of A Guide to Passively Investing in Commercial Real Estate. Inside, you'll learn the basics of passive income and real estate syndication, what kind of returns you can expect, how to find a sponsor, and how to evaluate the risks. Download your copy in the show notes or visit lifebridgecapital.com/invest better to start your investment journey. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Phil Capron. Thanks for being on the show, Phil.
Hey, Whitney. Great to be here with you. Thanks for having me.
Yeah, it is great to have you on the show. I was just telling Phil, he and I met like 2 years ago at a conference. I remember meeting him. I cannot believe we have not had him on the show since then. He's been doing some very big things in our business and been very successful. He's a Navy veteran, multifamily investor, active syndicator, and CEO of Mission First Capital. He's dedicated to bringing the opportunity to invest in multifamily properties to everyone, regardless of income level, and helping support the military and first responder communities by allowing them to invest to like high net worth individuals. As over 400 units purchased, he is a full-time multifamily acquisition specialist. Phil, welcome to the show. You have some big things happening right now, and I feel are going to be just very timely and very popular subject or topic for many of our listeners. And just the way how your business has evolved and what you're focused on right now. But I want to back up a little bit, talk about you as a syndicator and operator, how you gained the just acquisitions expertise that you have, some of that. And also, even before that, I want to thank you for your service. Just very grateful for our men and women who serve our country and even you serving them now, giving them the opportunity to invest. But tell us a little about your background in syndications and how you gain this expertise.
For sure. And right back at you on that one. So I appreciate it. And all of our brothers and sisters in arms, right? So I got into real estate, as I jokingly say, the regular way. I dropped out of college, was playing drums in a rock band, was ocean lifeguarding, played.
I played drums too.
What's that? Sorry, what was that?
I said, I played drums too.
I didn't know that. Okay, there you go. That's awesome. And there's another multifamily guy, Tim Kelly, who's a big drummer as well. So maybe it's something in the drumming that draws us to this industry as well. That's funny.
Almost 1,000 shows, and I bet most of the listeners didn't know that about me.
I sure didn't. That's awesome. Was playing poker for a living, which, it's not what every parent dreams of their child doing in their early 20s. So a conversation was had, are we going back to school to like finish your last year because you're like really close, or are we getting a job? What are we doing? I said, if I don't bring home 100,000 this year playing poker at like 23, I'm going to join the military. And everyone just laughed and laughed and laughed. So I made 85 and away I went. I enlisted in the Navy and tried out for a special ops job called SWCC, which stands for Naval Special Warfare Combatant Craft Crewman. We're the guys who take the Navy SEALs and other special operations forces to and from their missions on the water or, a maritime insert or extract. So that was a very interesting way to spend a few years. I met some great friends, did some cool stuff, nothing operationally, but it's definitely some cool training and saw some cool things. And it really, it sort of sowed the seed of, work ethic and teamwork that I've applied to my real estate business. So I got out in 2012 and, after reading the little purple book, I thought there was something to this real estate thing and that the way to attack that was to sell my buddies' houses and to list their houses when they were transferring away from Norfolk. Very quickly learned that wasn't where the wealth was being created. So I said, okay, flipping houses, that must be the way. The typical path, right? Did a couple dozen flips and then started buying a couple small rentals and struggled with the toilets and the tenants and, all that mess. And then finally saw the light and bought a small multifamily building. And that's when everything changed. So over the last few years, I've racked up a little over 400 units, as you mentioned. and a couple JVs, several JVs, a couple of syndications, and now we're doing this Regulation A Plus Fund thing called Mission First Capital.
Nice. I appreciate just the color that you paint there and just getting to this. I feel like most people's journeys are in a lot of different directions they didn't expect years ago, and then finally, even now, I never imagined, having a real estate business like we do now, not too many years ago. And so it's just incredible, the path. But often I hear, just military folks, and I'm one of them. It's just like really taught me to have that never give up mindset. And it's helped me so much as an entrepreneur. But you joined the military, you came out and you got into real estate, you figured out that scaling was going to be difficult, flipping. I bought a multifamily unit. Things changed. When did you syndicate your first deal after that? How did you learn that process?
So as you mentioned, we met at Rod's boot camp. Love Rod. I'm actually going to attend his coming up here in a little while. He has them a few times a year. Michael Blanc's events, real estate guys, Jake and Gino, Bigger Pockets. There's just so much information out there right now. Your show, it's never been as easy as it is right now to, utilize Drive Time University. When you're just going from point A to point B, you can learn about anything in the world. And what I decided is, it was going to be multifamily real estate after buying this first 13-unit building and having the rents come in a few months in a row. I said, hey, this is, really cool. So I actually didn't syndicate a deal until I think my fourth deal. The early ones were my money and then joint ventures. Because what I learned in scaling up is that you needed a few things. You needed big equity, which I didn't have. I burned that in my first 2 deals and I was out of money. Big net worth, I definitely didn't have that. You need some level of asset management, brokerage, experience to sort of know what you're getting into on a larger level. And then, the construction side. Value add is all the rage, right? And especially in this market, you have to be able to force some appreciation. So the construction side, being a flipper gave me an inroads to that, but not quite to the level that you need to really attack a large multifamily project whose budget could run in the millions of dollars. So my first few deals were networking with folks who rounded out my team in those respects. And then finally, I launched my own. And, I felt like I was equipped and capable of steering the ship with folks as other GPs, but also as vendors and employees to make sure that our investor equity and fiduciary responsibility was there to hit our business plan. So
nice.
Did that help? I mean, that's kind of like
yes. No, it's good. I want us to have enough time to talk about what you're doing now. So I want to fast forward just a little bit. And I want to get into this Reg-A Plus Fund model that you're doing now. First, why a fund versus, I know you've done a few syndications now. Why the fund versus just this, individual deal syndication, like you were doing?
Right. So as I was trying to get out there's a lot of different types that are required to run a successful syndication. You've got the deal guy, for lack of a better term, and that's a seat that I like to sit in. You've got your asset management folks, your underwriting folks, your equity raisers, your investor relations types, your construction types, and all of them have to sort of play in the same sandbox. And, by the time you split up a GP, it can oftentimes get kind of diluted for each individual partner. And I was looking for a way, not only for everyone involved to get a larger, chunk of the deal, but also for everyone to sort of stay in their lane and stay specialized. So as you find a great deal and you syndicate, you got to spin up the SEC attorney. You have to do the investor presentations. You have to hit your list. You might bring in another partner who's stronger with capital raising if, you just brought another deal to your group. It's just kind of the reality of it. And all of that takes a lot of time and effort. My thinking with starting Mission First Capital is if we focus strictly on the capital raising side, the investor relations side, and really providing a fantastic experience for, military and veteran investors to kind of come alongside and ride with us, through our projects, they don't have to be concerned about, the nuts and bolts of every individual project, because we're insulated, we're spread across a portfolio of assets, and frankly, a portfolio of operators. We're operating some of our own stuff, but we're also partnering with military operators with some experience that bring us great deals. And what we do for them is we provide all of the equity, do the senior debt, all the coordination with the bank, insurance, legal, net worth guarantorship. And then once we've acquired the asset, high level asset and construction management to assist that boots on the ground deal guy or girl to better do their job and then get on to the next one. So it's a division of labor play.
Interesting. I think it's an incredible model and allows you to scale really your side of the business, provide a lot more value for a partnership as well, and even have more opportunity to do more deals, right? You're working with more operators, so you see more deal flow as opposed to, say, just Phil looking for his own deals, staying right here, right? And so it's an interesting model. So why like a Reg-A Plus Fund? What does that mean exactly? Why A plus versus something else?
Great. Yeah. So we're probably talking over the heads of a lot of folks, even though your listeners are sophisticated, real estate investors, sponsors, syndicators. So Regulation A Plus changed in 2012 with the Jobs Act. It used to be fairly arduous, and it's still a little bit of a bear to get launched. But I'll skip right to the greatest hits. As most of your folks know, Regulation 506B, you can invite your non-accredited friends who are sophisticated, up to 35 of them, to invest with you. But then you can't advertise, which once you've gone through your list, that's it. And you can only take 35 of them. And then on the 506C side, you can notoriously advertise wherever you want, shout it from the hills, but you cannot take non-accrediteds. As a couple of military veterans, I don't know about you, but even now, most of my friends aren't rich. Most of my friends are not accredited investors, and they look at what I'm doing and they say, hey, I want to do that, but they're not able. It's not legal. So Regulation A Plus kind of blends the best of both worlds. We can take non-accredited investors and we can advertise. The trade-off for that is a very, very high level of regulation from the Securities and Exchange Commission, FINRA, the state SECs, the engagement of all sorts of third parties to make sure that every transaction is done and audited above board. So it's tremendously expensive. I think we're into the thing right now for $250,000, $300,000 just in setup. So that's what's going to keep most people from doing it. But we're attacking this as at an enterprise level, not as a deal level. And once I made that decision, it was an easy one for me. It's not been an easy road, but I know that for where Mission First Capital is going, it is the right path. And at the heart of it is the ability to allow our brothers and sisters who previously have been excluded from this asset class to come alongside us and to participate in, what's been historically a very stable and lucrative asset class, as everyone who's listening.
So it allows, so I guess it allows for much lower minimums as well and non-accredited. Is that what you're
correct?
What you're
that
saying?
was a really long explanation to hit that exact point that you said. So our minimum is $5,000. And the theory behind that is that just about every service member that is interested in investing could do that on an annual basis. There's also another little tricky rule in there that an investor can't invest more than 10% of their annual income or their net worth, whichever is higher. So, 5,000, we figured that a lot of active duty service members would be right about at that 10% mark when you figured all their different sources of income. And those who
nice
their VA loans to purchase homes and have some other stuff with different investments will obviously be a little bit higher. So is something like this considered an open or closed fund, or how does that work? Exactly. So that's another great question. There's people out there right now that are doing like 506C funds, which enables them to, like I described, buy a suite of assets. So they're not all their eggs are in one proverbial basket with one asset and one market. What's different about ours is we're going to be open for a longer term. We intend to stay open for about a year before closing this round. And we'll launch another one, so on and so forth.
Nice. How do you, I guess, what are a couple of tips in managing a fund like that? I just imagine all these investors and different deals. What's some tips on managing that?
Yeah, so it's about, I think with any real estate deal, it's about having the right people, and I'm just incredibly fortunate to have a phenomenal team around me, which enables me to stay in my lane, which is finding deals local to Hampton Roads, Virginia, or even up to Richmond. So that's sort of my wheelhouse. And then also to find, network with, and vet the best military operators in different markets that we're interested in, and vet their opportunities as they become available. So I can go out there and do due diligence with them and walk properties and, all that kind of stuff. And I know that somebody's working on the compliance, somebody's working on the investor relations, somebody's working on the legal, all that stuff's taken care of for me by great people.
Nice. Team's so important. No doubt about it. I know the listeners know that. They've heard me talk about it so much and how we've hired and trying to find Class A talent, and so important. Phil, anything else about, say, the fund, before we have to move to a few final questions, but anything else about the fund specifically that, say, you wish you had known when you started it that you know now?
Of course. I mean, we took our lumps on this with the SEC, with FINRA, with maybe submitting documents out of order. So I hate to sound like a broken record, but team, right? So when you're interviewing all of these vendor partners of yours, to make very clear expectations and to make sure that you have a complete understanding of all the costs involved in the entire process and timeline up front to avoid any surprises. We've received a few surprises along the way that have delayed us and cost us money and this and the other thing. But when you're dealing with government agencies, sometimes that's just par for the course.
When you say, vendors, I'm sure, I expect you're working with a great attorney that's having to draft all this paperwork and documents, and obviously you're able to communicate with some government, individuals, or individuals that work with the government. You're waiting on responses and things like that. Is that accurate?
That's it. So in addition to a couple sets of attorneys, we have 3 different sets of accountants. We have a broker dealer who works with family offices and, other, sort of retail investment opportunities that are sort of outside of our individual wheelhouse. But there's a handful of states that require any security to be sold by a broker dealer within their states. So that was something that we didn't know right off the bat. And there's 6 of them, 6 or 7 that we're required to have a broker dealer. But when you have one engaged and working for you, the other states, they look highly on it. So I said, okay, well, we might as well hire them for all 50 and make sure that we are covered so we can focus on what our job is, which is, finding the best possible commercial real estate opportunities for our veteran investor partners to ride along with us and enjoy, what we project to be a pretty fun ride. That's something a little bit different than the stock market, a little bit different from the thrift savings plan that government employees have access to.
Yeah, at least this way they have some control over what they're investing in, right?
Yep.
And who they're investing with. You mentioned, I meant to ask you, because I'm sure there's listeners that are wondering, like, did you have to be licensed, like as a broker dealer? But you mentioned you partnered with one, or you
Correct.
hired one. Is that, what does that relationship look like as you move forward with this fund and working with a broker dealer?
So yeah, they're just a facilitator for us. So they take a small fee for, there's a statute. It's called like anti-money laundering and know your consumer disclosures within the SEC. And so basically that's their wheelhouse. When an interested investor comes along, they're going to fill out their subscription paperwork similar to when we do a normal syndication, and then they get to work. And even when they want to invest, they sort of wait and give us the green light or the thumbs up that we're clear to accept money from these folks, that we know who they are, we know where they live, all this stuff. Because that, that's a risk just in today's world. And I think that extends to more traditional syndications as well. So that's something they do for us. And also a lot of the tech, the investor platform tech stuff. We work very closely with them to actually get it tweaked and branded and everything. So it's mission first capital, not some generic third party intermediary.
Nice. Is there a goal for the fund? I know you said maybe open for a year. Is there a certain amount you're looking to raise or a certain number of assets you're looking to purchase?
Yeah, so we're looking to raise 20 million in the remainder of 2021. So a full Regulation A plus fund can raise up to 50, and then you can do an amendment to go to 75, or you can just file right away to go to 75. So we figured year one we'd kind of set a more modest goal. So 2021, raise 20 to buy 40 conservatively, and then through our value add strategy, we are looking to for lack of a better term, burr those properties in between 18 and 36 months, recycle some of the money, and then go buy a second tier of assets, so that we've got a wider base of our pyramid. Everything should be cash flowing nicely, paying down debt, all the wonderful things and why we do real estate, right? And then when we come to our investor exits, we've got a lot of equity to pull from, a lot of cash flow to pull from, to make sure that we get them what they're bargained for first. Because aside from a small asset management fee and a small acquisition fee, we're not taking like a split or anything like that. It's of a 70-30 syndication. All the money is earmarked for the investors, except for those couple of fees. Once they're paid out, then we get to enjoy some upside. So our priority is to expand the opportunity to the most possible people, and the kind of people like we worked with in the military are the ones that are near and dear to me. And then to make sure they get what they're bargaining for. And then if there's some upside left for us, fantastic. I think there will be, based on our track record, and then we just keep doing it again.
Nice. No, I appreciate you explaining that. And I know you've been in multifamily for a few years now. You've done numerous projects. How do you prepare for a downturn when you're looking at maybe a new deal, or even through this fund? You can answer that either way you want.
That's so tough, because if you are in the acquisition space right now, that it's just absolute pandemonium out there. So, it's another reason we're really excited to partner with some of the best operators from all around the country to, acquire a suite of assets that's not just in my backyard, so we're insulated against any geographic risk, but you're talking macro market. So what I hear a lot is people are worried about interest rates, and of course that's sort of puts a damper on the multifamily party. When interest rates go up, cap rates tend to go up. In conjunction with them, property values go down. But what we learned from this whole coronavirus thing is that people are always going to need a place to live. People might not always need an office. People might not always need a pad site for a restaurant. So I really like where we sit. And even in the state of Virginia, there's been so much support from the state government to catch people up on rent. Debate that as you will about whether that's a good thing or a bad thing. I think from a societal perspective, it's a bad thing. But I think as a property owner, looking out for my investors, it's a good thing, right? So I think that's going to continue. So I have a hard time forecasting like a big cataclysmic, everything is going totally crazy downturn, but you always have to prepare for it. So something that we're doing is we're being very, very careful with our debt. Bridge loans right now, not only are they expensive, the terms are not the best. They're not the same as they were in 2018, 19, and 20. So if it's a smaller deal, we might just pay for it in cash and then burr it out with some long-term non-recourse debt on the way out. And our fund structure allows us to do something like that, because the first 18 months is, we know we're not going to kill it. Cash flow wise, it's about stabilization. It's about creating that value, and then having a cash flow stream for the years to follow.
Definitely a great option as you have a fund to be able to go pay for things with cash, right? Mm-hmm. And then finance it later. It's such buying power there that's needed at the moment, or always, but especially right now. What about any predictions, Phil, that you have that you could share with us over the next, say, 6 to 12 months in the real estate market? Anything you see or expect to happen?
Barring a large world event, as we're recording this, there is an issue with the Southeast United States and a gas pipeline that's been interrupted by terrorist hackers. So something like that has the ability to really throw an interesting dynamic into a market. But assuming no large worldwide or nationwide crisis, I anticipate a very competitive market in the next 12 months. Cap rates continuing to compress, interest rates staying about where they are, which the Fed has indicated. The banks might try to improve their spread as they're starting to do, which makes our interest rates go up ever so slightly. But it's still fantastic debt, and there's a ton of money that's just looking for a home. And a lot of smart money believes that a safe home, the best house on a bad block, as they say, is multifamily real estate. So I anticipate competition to increase, more people to be coming and playing in our sandbox.
Phil, do you have any daily habits that you are disciplined about that have helped you achieve success?
I wish I did. I'm a miracle morning practitioner, and I'm hard on myself when I don't get it done. But even if you're only doing a few of the things, if you're not doing a perfect miracle morning, and if you're not familiar with what we're talking about, definitely go check out the Miracle Morning, read the book, listen to the audiobook. Hal Elrod's a genius, and love that guy. I live about 100 yards from the beach, so I take my dog, take the earbuds out, no podcasts, no phone calls, just the sound of the lapping ocean, the sand in my feet, the dog. That's a good place to do some thinking. A cup of coffee on my porch with a journal. I read a lot.
Now we're talking.
Yeah. Something I'm ashamed of is my exercise hasn't been what it should be lately, and there's excuses as long as my arm, but you just got to do it. If you're not feeling good, go move. That's very helpful. But those are some of my go-tos is something that's sort of mindful based, something that connects with nature, something that gets you moving a little bit. Surfing, skydiving are mine that I really like.
Awesome. No, I love being on the beach personally, but really, I'm not a big swimmer, but I do just the thinking time that can happen on the beach has just been great for me. My wife loves the beach, so we go, but that's my favorite part about it, especially coffee early in the morning. But those walks, it's just very clear thinking and I don't know, just some good times there. Phil, what's your best source right now for meeting new investors?
So since we're going to this fund model, we're more of a marketing machine than a person to person. But what I found with military folks is it's right under the current. Everyone's looking for something outside of the stock market. People know that's a little bit wonky right now. Some people are doing really well. Will that happen forever? I don't know. TSP, same kind of idea there. People are looking for a little bit more stability. They like the idea of real estate. Maybe they've bought a home using a VA loan, but then they rent it out and it's a disaster. Some people just don't have the stomach or the appetite for those types of things. So they're looking for exactly what we're doing. We're here. So Instagram, Facebook, we're going to be doing a lot more in the coming months of sort of like a HGTV style of, hey, this is our building. This is what we're doing. This is how this all works. Lunch and learn, stuff like that. Just bringing people into the fold, because this isn't an end all be all of financial freedom, investing with Mission First Capital, but it's a good step. It's part of the whole portfolio or basket. They invest with Mission First, then they become accredited down the line, and they can invest with LifeBridge. They can go and do big dog stuff. But right now there's a disconnect. That rung is too far away, and we're filling the gap there. We're providing the bridge from can't invest in anything outside of what your advisor pushes on you, mutual funds, whatnot, to you're doing actual private real estate deals.
You said you're a marketing machine now. It's so true. All of us are that are in this business. You got to get in front of people, right? So your customers, so your investors, so they know who you are and what you're doing. One tip on the way you've done that recently, or somebody that's coming into this business now.
So again, it's about having great people and great partners. Our marketing firm, if you reach out to me privately, I'm not going to blast them across the airwaves, but if you see some of our stuff and you like what we're doing, reach out to me and I'm happy to connect you. I'm just super impressed with the holistic approach they're taking to marketing. My team members, everyone believes so strongly. I mean, we're 100%, veteran military family owned and operated. So everyone lives our mission and they're our best ambassadors. And as our team continues to grow and we've got operators all over the country, I anticipate that they're going to be our best source of marketing going forward. But right now it's just kind of like, beating people over the head with Facebook ads and Instagrams and Facebook Lives and, pay-per-click and just, it's kind of boring, but it is what it is to get eyeballs, right?
What's the number one thing that's contributed to your success?
It's just, we spoke about the military earlier. You're put in a lot of unwinnable situations in training. And, for those folks that have gone on to actually do real world stuff, they could speak even more on it. Life's not fair. You're put in bad spots often in real estate. Talk to anyone who's been investing in real estate for a while and they'll have tons of war stories for you, really tough stuff. And the key is just to keep going, not to quit, to constantly look for a way out, a way over, a way around to accomplish the mission. And that's why I love working with military folks, is there's a common thread there that we're just not going to throw in the towel. We're going to see it through.
So true. You got to keep going, right? Can't give up. No choice. Phil, how do you like to give back?
So I had a charity a couple of years ago that has since gone a little by the wayside. So running a charity, as you know, running a mission-based organization yourself, which is incredible. And I love what you guys are doing. It's hard, right? It's like a whole nother business, and there's not, you're not taking money out of it, but it's taking time and blood and sweat and tears. So unfortunately, I've let that fall by the wayside. I like to give a lot monetarily, and I would like to find something that really jazzes me to give my time to as well. Right now, my time is given most with, newer investors, veterans usually, that I see promise in. I will invest in them time-wise or monetarily to try to give them that jump start to have this same sort of path that I've had in my real estate career. And ultimately that's the goal of Mission First Capital. And in 10 years, if I don't have 1,000 veterans that are making over 100,000 a year from careers that we've created through Mission First Capital, then I'll consider it a failure. I don't care if we've got $1 billion under management. The way that we changed our communities and really change this world for the better is making sure that the best people, great people. And I think that if you wore the uniform, you signed a check to the federal government for an amount up to and including your life, that you are one of those people, that we give them the opportunities to create in their own communities and the capital that they can go and kind of ripple effect out. So that's my mission. That's what I'm up to.
Love that. No, I appreciate you sharing that, giving back in that way. I just encourage any listener that's a veteran or in the military, in any capacity, I hope you'll reach out to Phil and connect with him. And, on that note, though, I just want to thank you for just sharing today with us about your path to success in real estate and growing your syndication business and then moving to the fund and what that is and why and how you're helping so many people in the military. But how can listeners get in touch with you and learn more about you, Phil?
So our Facebook group, Mission First Capital, I'm on Facebook. I'm a little harder to get a hold of these days, the stupid friend limit and all that. You can email me, phil@missionfirstcapital.co, not .com, or surf on over to our website, missionfirstcapital.co.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.